Well, let's go live now to the Finance Minister, Simon Birmingham. Minister, good to see you. Thanks for your time this morning. So on to Labor's policy. We'll start there. We just heard from Richard Marles. And what it appears that is if someone dies who bought a home under Labor's scheme and their children don't qualify, the property will be sold. Your response to that?
Pete, these are startling revelations from Richard Marles about Labor's policy. The government could see that there were many holes in Labor's proposal to co-own Australians' homes with them. But what Richard Marles has admitted this morning is that if you die and your kids earn a few $1,000s extra, Labor will force the sale of the family home at that point. But also, incredibly, what he said during the course of the interview was that if you yourself earn a few $1,000s extra under this deal of joint home ownership with a Labor government, then you'll have to suddenly come up with potentially hundreds of thousands of dollars to pay the government back. These just aren't feasible ways for Australians to get into the home ownership market. The government has a clear and sensible policy that helps many more Australians than Labor is proposing, 50,000 a year under our policy, to be able to enter the market in a sensible way, fully checked by banks, but also to ensure they get to own 100% of their own home, not Labor's proposal to have Mr Albanese sitting at the kitchen table, and now it seems that Mr Albanese will be sitting there when the will gets read too.
Mr Marles said, though, and you just referred to this there, they do have the option to buy, so buy out the government stake and everything if they earn below $90,000 though. So they still do have that option. Is that fair enough?
These are the risks and the uncertainties that Labor's model would create for home ownership across Australia. You'd have the risk in terms of not owning your own home outright, but owning it jointly with the Australian government. You'd have a risk in terms of not owning your own home outright and being in the circumstance where if your income went up a bit, Labor would suddenly say, you've got to start paying the government back. That wasn't part of your plans, but they're going to suddenly expect hundreds of thousands of dollars to come back. You've got the risk that, of course, if something tragic happens and you pass away and you've planned to leave that to your son or daughter, well, in those circumstances, Labor's saying if they earn a little bit too much, there'd potentially be a forced sale in those circumstances. So these are all real risks, and ultimately Labor's policy is one where they get to keep ownership of up to 40% of the house, while the homeowners themselves pay 100% of the stamp duty, 100% of the council rates, 100% of the upkeep on the house, 100% of all of the other bills, services, maintenance costs, etc. And even if you go through the process of renovating and upgrading your house, you're then lumbered with some sort of expensive and difficult valuation process that may not be fair when it comes to the final outcome of selling your home.
Is it a death tax? Does that qualify?
Well, look, it's certainly a situation where inheritances are threatened by the fact that a Labor government would be sitting there at the reading of the will, potentially forcing the sale of the family home. Now, that's not something that a coalition government would ever support. Our model is very clear in terms of supporting more Australians to own their own home outright. And importantly, Pete, our model has been working and making a difference. Over the last year, 160,000 Australians entered the first home ownership market. That's compared with averages over about the last decade of around 100,000 per annum. So what you can see is that under our model, more people have been getting into the first home ownership market. What Scott Morrison did was tackle perhaps the biggest barrier, which was the fact that you had to try to save more for a deposit while still paying rent. We've reduced that so that young Australians need to only save 5% deposits, single parents need to only save 2% deposits. They can get into that first home ownership market without still having to pay rent, but they get to own 100% of their home rather than this crazy Labor idea of only owning 60 or 70% of your home and sharing the rest with a Labor government who may well change the rules on you if you just earn
not a death tax though.
Extra.
You're not going to scare people with a new pitch for a death tax.
I think Australians will see it for what it is, which is an unstable way of buying a house, an uncertain way of buying a house, a dangerous way in terms of what happens if your own financial circumstances change, suddenly having to come up with hundreds of thousands of dollars extra, and an unfair way when it comes to the fact that the family home may be forced into a sale at the point where you're trying to pass it on to your kids.
OK, are you expecting an RBA rise today?
That's a matter for the Reserve Bank, but Australia's official cash rate has been sitting at 0.1% for 18 months. That's the lowest ever level we've seen in Australia. And there was always going to be some normalisation, and particularly at a time where we're now facing huge international and global uncertainty, big pressures around the rest of the world hitting inflation elsewhere. Australia's withstanding those pressures far better than most other nations, but we're not completely immune from them. It's why, as a government, we provided cost of living relief in the recent budget. It's why, as a government, we also made sure that we paid down deficits to the tune of $103 billion to make sure that we were reducing the impacts and pressure on inflation and therefore on interest rates. And if you look at the choice at the upcoming election, it's where the danger lies, in the sense that Labor's big spending policies, be they the one we were just talking about or many others, and their vague promises of around $302 billion, then only add pressure in terms of inflation and interest rates.
Well, some people say that your loose fiscal policy has contributed to this inflationary problem that we've got.
Pete, I don't accept that thesis when in the last budget we made the biggest improvement in a budget bottom line in some 70 years. The vast majority of the improvements we put towards reducing deficits, as I said before, by $103 billion compared with what they'd been projected to be. Our policies have got Australia to have the lowest unemployment rate in around 50 years. They've got us to a point where we're in a position of economic strength relative to other countries, but that doesn't mean we're immune from global shocks. And when you've got a war in Ukraine, oil price spikes, energy crises in parts of Europe, continued aftershocks from COVID-19, closure of large parts of China's economy at present due to COVID, all of those pressures are going to put shocks right around the world. Thankfully, here in Australia, we've been withstanding them better than most other countries, and our inflation rate remains lower than the US or UK, Germany or Italy, Canada or New Zealand. But we're not completely immune, and the choice at the next election is one very much between a coalition government that's driven people into jobs and created that strong economic environment, better able to withstand these positions, and a Labor government with risky policies and big spending ideals, all of which would create the risk of even more pressure on inflation and interest rates than we're getting from overseas.
Okay. Simon Birmingham, the Finance Minister, thanks for your time today. We'll see you again soon.